Hi, this is Alexia Tsotsis with TechCrunch TV, and I'm here with lauded.
I don't know if that's the right word.
Larger than life.
Yes. Well, infamous maybe?
Infamous.
Probably infamous.
500 Startups founder.
Not famous yet. Dave Mcclure.
Dave Mcclure. Call me Dave Mcclure.
Yes.
And we are at the very first 500 Startups
Accelerator Demo Day. That's right.
And there is a lot of excitement. Your office is beautiful.
Thank you. Yeah, we like it too. It's great to be. We're in Mountain View, very close to a bunch of big companies that we like to hang out with. Platforms, Facebook and Google and Apple are very nearby. And we have a 360-degree view of the Bay Area. On a clear day, you can see San Francisco, which we can today.
So, can you talk a little about the structure of 500 Startups? It's a little bit unconventional.
Sure. Well, very unconventional, I think, but yeah. So we are a venture capital fund. We're a seed fund, but we invest in companies at the very earliest stages. So we also run an accelerator program or incubator program here. So we invest in a lot of companies, relatively small check sizes, between $25,000 to $250,000. Typically $50,000 to $100,000 when companies are first raising capital.
So right now you've seed invested in 110 companies.
Something around that. I might be more or less, but yes, about 110 so far.
And 12 are accelerators. Yes,
we've been, the fund opened last summer, and we started investing very quickly then with some companies that I'd already been involved with from before when I was working at Founders Fund. But we just launched our first accelerator program in January, and this is the first coming out party for them. So we had 12 companies, actually 13, although one of them has already raised capital and left the nest.
Which one?
Mind Snacks, which was an amazing company doing game-based language education for iPhone and iPad. And they recently announced, I believe, a $1.1 or $1.2 million round on TechCrunch with Aiden Sencut, Felicis Ventures leading the round. And we were also involved, so was Mcclure and a few others folks.
Congratulations.
Thanks. Well, congratulations to them. We were happy to be involved.
So how do you find the startups, first of all? And then what's the deal for an accelerator startup? 500
sure.
Startups, accelerator startup.
Well, these days you kick a rock over, you find a startup in Silicon Valley.
Where do you find the cold startups? I mean, it's partly having good taste, right?
Well, I don't know if anybody would accuse me of having good taste, but I guess I've been in Silicon Valley for over 20 years, and I've worked for a lot of companies, worked with and for a lot of companies that have strong connections to entrepreneurship. So PayPal most notably, but also Mint.com, worked with Facebook on the Facebook Fund, worked at Founders Fund in the past, way back, a lot of work with Microsoft and Intel and even Yahoo. So have spent a lot of time with companies here in the Valley that continue to turn out great entrepreneurs. And then we also have strong connections to Stanford and Berkeley and other universities in the nearby area. But I would say probably the most notable way that we find out about companies is through our network of founders and mentors.
How big is the network?
Well, the network of mentors is over 130 people right now. So my partner Christine Tsai, who came out of Google and YouTube, has helped us put that together. But we have people in the mentor network who are representatives from Google, Facebook, Twitter, Zynga, LinkedIn, Groupon, just people all over the world, really. So not just Silicon Valley, but Asia and Europe as well. And then we have over 100 companies in the portfolio, probably close to 200 founders. So between mentors and founders, some of our investors, we probably have a network of 300 to 500 people that refer companies to us.
So it's not, you don't put up a link somewhere and accept applications. It's more a word of mouth or referral.
Right. Well, for a few programs like the Twilio Micro Fund, we do have an application process, and for the designer fund that we're now putting together, we'll have an application process. But most things we explicitly do not have an application process because we prefer companies to be recommended to us through our network. So a little bit different than Y Combinator or Techstars or other programs, although we think those programs are great.
So let's say I've got a Groupon clone and I'm and I'm a 500 startup.
Well, if you're a Groupon clone, you probably wouldn't be
not.
something that we would invest in. But if you were a company that was trying to do something around group buying in different areas, we might look at doing that.
But what would be the deal? So how much would you invest?
Oh, for our accelerator program, our typical structure is we invest $50,000 on a $1 million valuation, so for about 5% of the company, which is a somewhat similar structure to other accelerator and incubator programs. We probably write a little bit larger check size at a little bit higher valuation.
Then you do a follow-on, which is different.
Yeah, and we also selectively follow on in companies, hopefully the ones that are working. So out of our first fund, we expect to do probably 200 companies at incubation and seed, maybe 50 companies at Series A, perhaps 20 or 30 at Series B.
Is that the 30 million one we reported on, or Robin reported on?
I think you're talking about the intended size of fund filing, which I have no comment on, but is publicly available via the SEC disclosure. Yes, that was already reported on. No, so we are typically a minority investor in follow-on rounds. Almost every later stage than incubation and seed, usually larger funds or other seed funds are leading the round. But we're very syndicate friendly. We're very follow-on friendly. We do a lot of companies out of our own program, but also out of Y Combinator, SeedCamp, TechCrunch, AngelPad, DreamIt Ventures, so plenty of those. And we also typically work with a lot of downstream seed funds and venture capital funds.
A lot of the 22 companies that I've seen present here are applying like old world business models to the cloud, and they seem to be thinking a little bit more about building an actual business as opposed to some other startups that I've seen or other people I interact with. They seem somewhat more mature, or at least more focused. Which
well,
is
whether or
very
not they're
surprising.
mature, hopefully the companies have a business model. So I think, well, the one thing that's really different about our investment thesis is we are not afraid of small markets, I guess I should say. So typical venture capital perspective is big markets are better. We actually think that in many cases, focus on customers and specific customer segments are better for us, just because we think we're better able to identify customers, tune the solutions we're going after. And in some cases, there's early exit opportunities that we think provide better odds for our companies that might be in the $25 to $250 million range, whereas many VC funds and even seed funds are aiming for exits that are probably in the 100 million and really north of $1 billion. So we like people who focus on very specific customer segments and understand those customer segments. But also we like companies with pretty straightforward business models. So in particular, transactional focus, either e-commerce or virtual goods, or transactional focus.
Like Get Punched.
Sure.
The loyalty cards on the
So
phone.
their business model is probably based on bringing customers to merchants and an affiliate fee. So that's actually another thing that we look at is either lead gen or affiliate models, and also freemium and subscription models. So we don't have to force a focus on revenue early, but we like to have a simple revenue model that's easily understood, and that provides both less risk for the business because we're taking risk in other areas. But it also, we think, feels like it gets the companies to break even sooner, and we think that's important to have a focus on making money for companies.
So I know that you love all your children equally, but out of the out of the 22 that we've seen, which ones should we keep our eyes on?
Well, there's certainly lots of great companies there. I think some that have been picked out by people as being interesting. Certainly. Visually, which came out of Mint, some folks that I worked with there. I was an investor in Mint and did some consulting for Mint. Stu Langell was the founder, and that team produced a lot of the infographics and media and marketing that were very successful, generated millions of views and hits. And they're taking a business that actually also, it's not just eyeballs, but actually monetizes well. So infographics are a big business. That market is growing dramatically by a lot of media and publishing companies. And people are paying for those solutions.
So your shirt, how does your shirt apply to the philosophy of 500 startups?
Well, so a lot of our mottos are around design, data, and distribution. So we think that particularly for a lot of consumer-focused companies and small business-focused companies. The usability and the design of the service matters a lot. So often we refer to kind of our holy trinity for the startup founders, we think is the hacker, hustler, designer combination. So an engineer, a designer, and a business or marketing person really feel like those are the three key roles that are played by successful startups. And we have a really strong emphasis on design, both on our own team as well as the companies we invest in. But we think design is not just pretty pictures. Design really means thinking about the user's needs and interests, designing for usability. So not just visual design, but interaction design, the ways that people use the products, and really even emotional and psychological reactions for the users. So in that sense, design or form follows function.
The one before was be your fucking self.
Yes, right. I was wearing a different shirt this morning. So, I mean, we focus on useful and usable design. We look for that in our teams and founders, and we help them find those folks as well when they don't have them.
So you're doing 3 batches of 33 startups a year?
Well, we'll probably do 3 programs this year, so generally we're on a 4-month rotation. Right now we started with about 12 or 13 companies, but we'll probably ramp that size up. We actually have room here to do maybe 25 to 30 companies, but I think we'll probably do maybe 15 companies in our next group, maybe up to 20, and then probably 15 to 20, maybe a little bit more by the 3rd batch. So for the year, probably 50 to 60, and then on an ongoing basis, I think between 50 to 75.
So what can a startup do to get your attention, other than give you a ride, or be late to lunch or breakfast?
Let's just be clear, they're not giving you a ride. In that case, they were taxiing me to my car, but yeah. So I should be clear, we're not just doing accelerator investments. So we also do a large number of seed companies. In fact, the majority of the portfolio right now are seed investments, usually where we're investing between 50 to 100,000. Valuations probably between 2 to 5 million, in a few cases above that. And the things we look for, so again, pretty much a technical founder on the team is almost a requirement. In a few cases, a designer founder or a business marketing founder might be the alternatives, but we like teams that have engineering background and teams. We like people that solve a problem, so in general we're not looking for technology, looking for a solution. We like people who understand the customer and the problem space. And
like Baden. Baden solved the problem.
Right, so really talented technical team, but also built a solution for helping email productivity and applying game mechanics to improve making email more fun as well as more productive. We like, again, like I said, simple revenue models, so things that are easily understood and make money. We're not generally investors in advertising-focused businesses, with maybe a few exceptions. And we say we like to hit singles and doubles. We occasionally will hit a home run, but we're comfortable being the Ichiro for the startup world, not necessarily the Barry Bonds. And so if Sequoia is the Yankees, we're the Oakland A's.
Thank you. That's perfect.